Hello, welcome back, guys. So, Airbnb had a terrible day yesterday. It was down 7% and it has approached the 50% decline pretty much since its 1 year high of $212 over here. Now, if you can take a look at the 5 year chart, you will see that the company was doing well and then all of a sudden, kind of crashed with the rest of the stock market. But what happened? We are anticipating the earnings today. So, let's take a look at the stock news. What actually caused this decline? You will see here that a lot of articles are talking about bookings growth here, for example, that the stock drops ahead of Q3. But let's examine this one, why Airbnb stock was slipping today. Recession fears are back as investors look toward Wednesday's Fed rate hike decision, which is also an important thing here. And an analyst said the supply trends in the vacation rental market were weak. Another reason why you could be seeing this stock decline after its earnings, or at least it had a pretty steep decline a day before so far. Now there we are focusing on guidance as well. So what happened here? They were falling today at some point 4.7%, eventually like 7% actually. And we're anticipating the 75 basis point increase here from the Fed, more than likely. And obviously this has a detrimental effect in the economy, and it looks like we're having some weakness here from bookings. Now you will see a vacation supply rental tracker based on listings on VRBO. This is a competitor. You will see that they are saying that the industry is slowing, and listings on VRBO actually declined sequentially in October. Now, let's examine the company overall and see whether this decline is an interesting case for a buy. You will see here that the P ratio of the company is still sitting at rather high levels, 52.2 over here. Now, it used to be negative territory, meaning that they were losing money. Lately, they are making some, but overall, they have been losing money. It's just the last few quarters that they are doing better. The price to free cash flow similarly pretty high, sitting at 32 over here. And the company has been issuing shares like crazy, especially when the price was higher. They were issuing a lot of shares, so that's really bad here for an investor. Now, they don't have a lot of debt, but you will see here that although they have been growing, their net income has been going down, and it doesn't look that great over here. Now, again, recently, the past few quarters, things are a little bit better, but still, overall, the company has been losing money. Now, the free cash flow growth here sitting at near 2 billion, as you'll see lately. Again, this has been increasing, and total equity growth also increasing, but remember, they have been printing tons of shares, so they make money out of this printing. Now, you'll see here that the net income margin is actually 17%, which basically implies that they are making money. Yet, if you notice this very handy little chart here, you will see that it's basically the last quarter that things have changed and they were doing much worse. Now, obviously, this 17% could be a temporary thing, but you do have a baseline of what they would be making if they were profitable, and we're going to use that. Now, the return on equity 26% over here, without the company having too much debt, interesting to see, and a pretty high price to book ratio, as you'll see as well. I want to examine the financial statements. This is important here. You will see that the company has been increasing their revenue, not tremendously, but still pretty nicely, about doubling it in the last 5 years. And you will see here that they have been losing money. Now, if I take it to the quarterly over here, you will see that they have been having, like the last quarter was actually positive here, and this way you are looking at positive net income margins over here. But overall, they have been losing money. And again, if I go back, you will see that year over year they have been losing money pretty much, and a couple of years were better, some other years were worse, but overall they have been losing money. In terms of their balance sheet, as you would expect, you're gonna see here that the company has been pretty much getting a lot of additional paid-in capital because of issuing shares. That's what they do. And take a look at these numbers: 9 billion from shares, 11 billion from shares. Again, if you issue like more than 100% of your float, this is what happens. And in terms of total liabilities, 8.9 billion, 9 billion here pretty much, and total equity of 4.7. Again, pretty much because of the additional paid-in capital funding by investors. In terms of the cash flow, you will see here that the company has made some positive cash flow in the last fiscal year pretty much. That was because of a change in working capital, some other non-cash items mainly, and the stock-based compensation, depreciation, amortization. Pretty much we had a decline. We had a negative net income that actually was converted to positivity because of these adjustments. This is something that you don't like to see overall. You want your free cash flow to be coming from direct profitability. You don't want the company to be making no net income and then your free cash flow be positive. You want both of them being positive and pretty close to each other, frankly. Now, the free cash flow of the company was 2.1 billion, but previously, again, you will see a little bit of the of a situation where the company is making some 1 year, then losing some 1 year. Now, I want to take a look at our stock evaluation tool because it will tell us how much to buy the company for. And this is the most important thing, obviously. We really care about this one. Now, again, you have this handy little table here, which can give you a sense of what the company is worth and what the company has been making throughout the last 5 years. And we can use these averages here to come up with our projections. Now, the revenue growth that the company has been achieving, if you'll see here, they have been doing some years where they have been great, some years where they have been bad. But overall, they have been growing from 2.5 billion to 6 billion. So this is more than 2x in the last 5 years. Now, I'm going to go less. Of course, we expect, and I did check analyst estimates, expecting something like 10 to 15% for most years. So I'm going to do that. I'm going to go, let's just say 10, 12, and 14 here for our revenue growth, which is very likely for AirBNB to actually achieve in the upcoming years. Now, for the net income margins over here, remember, they have mostly been negative because the company has been losing money. And it is only the last quarters where they made like 17%. Now, since we do have to use some profitability, otherwise it doesn't make any sense. I'm gonna assume that the company is gonna make 14, 15, and let's go 17 here in terms of the projections. Now, again, this is an aggressive estimate here. I'm just taking it to the point where the company is actually profitable. Will continue at this profitability path, which is definitely not, more than likely, not really expected here. But I just want to see what happens if the company actually does make money, and a good chunk, like 14, 15, and 17 here. Does it make sense to buy? That's the whole point. And in terms of the free cash flow margins, again, they have been all over the place with the company pretty much losing money. So I'm going to use something that is pretty much the norm, 80, 90, and 100%, very typical. And for an annual return, I'm going to go with 13% here. So let's hit calculate and see, is this decline in AirBNB good for us? Is it a time to buy? Now, the current price sitting at $108 looks super lucrative still. I mean, the low estimates here, the low buy price should be near $21, the medium one $30, and the high one maybe even $40. But still, it's actually very far from the current price of $108. So, as it is right now, AirBNB does look rather expensive, and I don't think I would be adding money to it anytime soon. It would have to go significantly lower. Frankly speaking, I would say I would probably want it to be near the lows, like $20 or so, 25 maybe, something of that sort. But other than that, I don't think I would be a buyer right here. Now, our tool here has more modules, and you can kind of see some more interesting things even, like institutional holders, with Vanguard being one that has added quite some AirBNB, Capital Research Global Investors, BlackRock also added quite some Capital One Investors. So a lot of actual institutions have been adding to their positions back in June. You will see here quite a few of them actually, with Morgan Stanley being the one that actually cut a lot of its stake out of AirBNB. And you will see here that overall the total ownership of the company is sitting at about 40%, with investors being a little bit less in the past pretty much period, June 30th. Interesting to see what is happening with institutions here. And I also want to see insider trades. There hasn't been much in terms of senators, but in terms of insiders, I am seeing here that there has been quite some selling going on, and you'll see that this is the last 6 months and the last 3 months over here. Quite a few sales, quite a few lots being sold, which could actually also tell us that the company is paying a lot of stock-based compensation, of course, especially to executives here. I always want to take a look at the CFO or the Chief Financial Officer. It could be sometimes, so you can just search for it and you'll see Chief Technology Officer here. Now, we want the Chief Financial Officer. And so you will see that they own quite a few securities here, and while they have transacted quite a few, this is nowhere near the full amount. So this is just a small percentage of what they own, and very typical as an amount to sell. So they don't seem to be selling out of their positions pretty much overall, yet there are not too many buys as well. So you don't see any buys over here with their own money, pretty much with the executives' own money. So pretty normal stuff here, nothing really out of the ordinary. And of course, you can examine all the details here with our tool, but nothing too out of the ordinary over here. Now that's what I wanted to talk about in terms of Airbnb. Interesting to see what's gonna be happening with the earnings today, but as it is right now, I just can't be buying this company. But do tell me what you think about Airbnb yourselves, guys. I'd love to hear. And remember to leave a like and subscribe, and of course a comment below just to tell me what you think. And as usual, you can become a patron and gain access to all these tools over here, everything that I've used, and then some. There's a lot of stuff going on here. And I'll see you in the next video. Bye bye.